Good morning, ARMR Insiders. Take a good look at that picture. You've just joined a virtual hedge fund. You're one of those people milling around. Time to come into the conference room, sit down, and get our day ready. We're going to talk about big picture macro risk monitor going from yellow to red in one day. That was pretty quick. A hot knife through risk monitor yellow, which just happened. So what do we do now that the ARMR algos across the board, all 10 indexes are telling us risk off? What's the process for our portfolio? We'll go over what the portfolio looks like right now, how much cash we're carrying, and what investments we still have on. So I'll go over those things with you. We're going to highlight a bit of the big picture on commodities, what's really happening in commodities right now, and hopefully help all of us kind of make it through the noise to see what the real possibility is for what's unfolding. And then I'll wrap up with a discussion of the ARMR carry portfolio, which really takes center stage right now. When we're risk off like this, a lot of focus on trading the carry portfolio, how it will help us add risk again. So I'm going to go over all those topics. As always, whatever I say, whatever you hear anywhere else, at the end of the day, take the information, figure out your strategy, make it your own, risk tolerance, goals, all that kind of stuff, and then execute your strategy. You have to be the smart money. Okay, so step one, the risk monitor went from green to yellow to red, bang, in a couple of days. We saw the deterioration. So let's just go rip through some of these indexes. We'll get to that chart in a minute. Let's go through the indexes. Let's just update real quick. I spoke to you yesterday. I said, okay, risk monitor's yellow right now, because the strongest indexes were holding above the low of 2 weeks ago and above the moving averages and above the uptrend. So we can't just all of a sudden go red because we're afraid of the market. We have to read and react to what's happening. So you could see yesterday was a huge down bar, and it, of course, turns us red. That's the NASDAQ 100. The S&P 500 did the same thing. So the 500 and the 100 were hanging on, and yesterday just got blown out. Then the momentum index, which has been the strongest index during this whole run-in here, one of the strongest indexes, bang, had the same type of collapse at the end of the day yesterday, closing near the lows. Okay, so that's what changes the risk monitor to red. And we already knew things like the Dow were leading to the downside. That looked god-awful. Small caps have never been able to catch a bid, so they look terrible. And of course, the bigger picture that's real concerning is what's happening in the bond market. So couple of thoughts for you when the risk monitor goes red like this. First of all, volatility is spiking. And I asked the question, what are they going to lose control of first? Precious metals market, the energy market, or volatility? Because there is an absolute tap dance going on right now of the powers that be to control those powder kegs. VIX is starting to move. Energy's moving, gold and silver are moving. When it comes to energy, it's kind of strange. I would think it would be trading a lot higher by now, wouldn't you? All that's going on in the Middle East. So clearly they are stepping on the price of energy to try to contain it. You know, price of energy blows out, it's going to be a serious problem for all involved, except for, of course, Saudi Arabia. You know, they'll love it. So what type of market is a market where you see long dated bonds breaking down, gold and silver breaking out to all-time new highs, energy on the rise, volatility spiking? I submit to you that's a war market. It's a market where war is getting worse, starting to spread. You may say to me, well, why wouldn't treasuries go up? Treasury bills will attract a lot of attention, short-term treasury bills. But when hostilities escalate to this degree, it costs a lot of money to engage in war. That expense puts a lot of pressure on the countries paying for it. And so long dated bonds don't do well in that market. So the risk monitor's red. What do we do about it? Well, first of all, at 12:15 yesterday on the live stream, I was sharing with you no exposure to equities at that point. And I'm going to get to a reason why at 12:15. I'll show you on the chart what was happening. Front and center for our trading desk is the ARMR carry portfolio. We're using the carry strategy, all of our portfolios right now. So right now, what do you do now? Question is, what do we do now? Risk monitor just turned red. We're already in a max cash position. If you weren't already in a max cash position by 12:15 yesterday, you were, if you were trading with us live. The market tried to rally. When that rally failed, it was over. And I said that, I think it was 12:24. I said, that's it. It's done. It's another 100% down day in the works. We've had 200% down days in a row. I'll show you what that looks like in a minute when we go over the carry trade. So we're already protected. We're carrying tons of cash, treasury bills. What do you do now? Treasury bills, money market funds that are backed by treasury bills. Commodities are in our portfolio. Historical trends. When commodity bull markets get started, this is a B of A chart. Commodity bull markets get started. Take a look right here. This was the 1930s, 30s, and 40s. When you go from negative returns over a 10-year period to positive returns, it usually skyrockets. You usually get outperformance in commodities for a while. And that was during a war footing in the 1930s and 40s. Then, of course, you can go to the 70s, right? 60s and 70s during an inflation boom. So the purpose of sharing this picture is to remind you that there's going to be wiggles. They're going to do everything they can to keep a lid on the genie, but the genie's out of the bottle. They're going to try to stuff it back in, but they can't. The commodity bull cycle has begun. And once it begins, it's almost impossible to stuff it back in the bottle. So what we want to do is trade around core position in commodities, which we just have core right now. And let me say this. I think this is incredibly important. What do you do now when the risk monitor's red? A lot of your trading strategies, whether it be day trading, swing trading, or investing, are designed for a risk monitor green market. They're designed for a bull market. We are not in a bull market anymore. You cannot apply those strategies and expect the same result. The reward to risk has been turned on its head. The headline risk right now is enormous. We don't know what the next story is going to be out of the Middle East. We don't know what the next story is going to be geopolitically. So what we try to do on this desk is put capital to work when probabilities are at their highest and rewards worth risk. Right now, probabilities are diminished. That's what risk monitor red means. And reward versus risk, it's almost an impossible equation to figure out at the moment because the geopolitical risk is gone through the roof. So what do you do now when the risk monitor is red? Protect capital. That's step one. That's more important than capital appreciation. Capital preservation right now is more important than capital appreciation. So market opened higher. We didn't do anything. Let it sell off. Found support right where we wanted. Remember, we like to buy prior days low, prior days high, prior days VWAP. So this was a trade right around prior days VWAP. Top days ARMR ATR low of the day. That was the buy trigger. Popped up a little bit. Didn't even get to the VWAP this time. Rolled over, out at break even, and flipped short. And all the money's made short. You can flip short. You can buy puts. I know some guys on the desk have been buying puts on that flip trade and making a fortune there. So that window is open to me now. I'm willing to put that trade out now. It's been 2 days in a row where that worked. And if you remember 2022 trading, the two of us, we had day after day after day of flip trade gains. So step one, I look for the long side. I don't start shorting. I'm always bullish to begin. Step one, look for the rally, particularly in a downtrend. The market tends to rally first and die by the end of the day when you're in a downtrend. It's the opposite in a bull market. Market sells off first and rallies the rest of the day, right? It just makes sense. So I look for the rally first, and there could be some big snapback rallies in the morning. We're going to make money on that. And when it rolls over, flip short. And in a bear market, when volatility spikes, trade more. You can get 2 or 3 trades a day. You can get a long trade for a gain, a short trade for a gain, and then another long trade at the end of the day in like the last half hour that rips back to the VWAP. Those are my thoughts for you today. I look forward to working with all of you guys who are going to be on the desk in the trenches with me, fighting it out. I look forward to it again today. ARMR Report subscribers, don't forget, you can always ask me questions in the comment section of this live stream. I'm happy to answer it. Follow me on X at Brett Rosenthal or the ARMR Report. You can find me that way. We'll get the live stream going at 9:30. How do we use carry trade to build our portfolio back? It won't be today. It won't be today. But when the algos are in a position again, the swing algos in a position again for a potential risk monitor green over the next couple of days or weeks, there'll be some days in here where I'll say to you in the morning meeting, okay, if we get a carry trade on, then I'm going to be doing this in the macro fund and that in the special situations fund. That's not the case today. There is nothing to do today except for carry trade or watch. When the risk monitor flips red, take a step back, take a breath. In fact, now is a great time to take a break. If you're not going to trade with me on the desk, don't stare at the screen. It'll make you crazy because there'll be a stock that you love that goes up for an hour. It won't mean anything. Patience is key right now. See if you can act like the smart money and have the patience and get yourself prepared for the next leg. All right. You guys have a great trading session. I'll see you all on the desk at 9:30. Take care, guys.